All right. Welcome, welcome. We're all coming in here slowly now. Beautiful. It's the 28th. I think it's the 28th. Yes, the 28th December here. Very nice. We got the whole gang coming in here slowly and surely. Um, there's something I want to talk about, and that's going to be based on the post I did earlier on. If you remember the post I did about missing trades and stuff like that, so that's something I'm going to talk about today. And I think what we can also do is we can also answer some questions as we go along. The first question is, did you dye your beard? No, not at all. It's been like this. It's been like this. I haven't dyed the beard. One moment. Oh, it's the 27th. Okay, my bad. Let me get some papers. I'll get some papers and then we're gonna do this. All right. Oh, let me get a hard floor as well. We get a hard board, and then we're gonna continue on with this. All right. Let's get this question out of the way. Um, what's this? This question is, what's the top keys to trading successfully? I think the number one top key to trading is to understand, it's basically do it like what times you want to focus on. That's about it. Like if you want to talk about the first key, the number one key, that has to be discipline and giving it time. And before we hop onto that, let me just show you guys one thing here that we were talking about here earlier, right? So what I'm going to do is I'm going to draw a resistance right here. So most times this is what happens, right? Most times, let's say price is at resistance, right? And prior to this resistance, let's say price is just making these wicks over here. We got wicks and stuff, wicks going up and candles coming back down like this. And then you have more candles that start to go up and come back down, right? So once you're trading, and then what you're going to see is that sometimes you're going to see a candle that's moving bullish, right? It's moving bullish. It's breaking above these highs and it's moving higher. Now, it hasn't closed yet. So if the candle hasn't closed yet, sometimes what happens is that some people, they take a buy position in this area, right? So when you're taking a buy position in this area, you don't know whether this candle is going to continue moving up or it's going to come down. Sometimes what may happen is, let me just get rid of these questions here. So sometimes what may happen is the candle may continue moving because there's a lot of momentum, and if you took a buy at this point and you won the trade, perfect. But it's not all the time that happens. It's because we have around 600 people here, and we all can kind of like agree to the fact that sometimes when candle is moving up and you execute a buy at this position, the candle almost all the time retraces back in the range, right? And now you're stuck with this buy right over here. So the best thing to do is to wait for candle to close, because let's say if a candle can close bullish above resistance, right? Let's say a candle is closing bullish above resistance, and if you're looking to take an impulse entry, really important concept, right? If you're looking to take an impulse entry, and the way the impulse entry is going to work is if the next candle starts breaking the high of the previous candle, right? That's when the impulse entry is going to work perfectly. But there are conditions to that. Let's say if this is a 30-minute time frame, if the next candle is breaking the high in the first half of the 30-minute time frame, the probability of it continuing bullish is weak, right? So let me repeat that again. If this candle is breaking the high of the previous candle in the first half, which means the first 15-minute candle, then the probability of it moving up is low, right? But if, let's say, again, we have a resistance right over here, right? And we have a candle closing above resistance like this. If the next candle is breaking the high of this previous candle in the second half, then the probability of it moving bullish is way more than this scenario right over here, right? So that's a condition for the impulse trade. So you have to wait for candle to start moving and start breaking above the high in the second half of the candle, not the first half, right? So these things are really important. because sometimes like it's really easy to see someone do impulse entries on the live streams and see them work all the time, but we don't really look at these I'm not going to say advanced scenarios, but it's like being cautious of how the candles are printing, how they're forming. Those things are really important when you're looking to see that, okay, if a trade is going to work out or not. Because, for price to continue moving, you need candles to make higher highs and higher lows. And obviously you want, candles to print in your direction as well. Now, there's another scenario that happens almost all the time and where people lose most times is like, let's say if you have a resistance right here, right? You have a resistance and you have a 30-minute candle which is closing above resistance like this, right? If you have a 30-minute candle closing like this, now someone can say, okay, well, you know what? I'm going to execute a buy at this point right here. I'm going to execute a buy and I'm going to have my stop loss below the 30-minute candle and I'm going to expect the next 30-minute candle to continue moving bullish, right? That's a really good idea. But there's one thing that people always miss. Right? And one thing that you miss is like when this 30-minute candle closed, it left a wick over here. So you need to drop down to the 15-minute time frame and you need to see what this wick means on the 15-minute time frame. Almost all the time, what would the 15-minute time frame look like? I'm running out of space over here, but don't worry, I got a lot of printer papers. Even if you run out of space, we got a lot of printer papers. So on the 15, so now we're going to break this down on the 15-minute time frame. Right? And this may look like something like this, right? So this is the first 15-minute candle. So this is the 30-minute and this is the 15-minute, right? So this is the first 30-minute candle closing. So we're going to break this 30-minute down into two 15-minute candles. So can we all agree that the first 15-minute candle will look something like this? And then the second 15-minute candle, it may look something like this. Right? That this candle formed bearish and that created the wick on the top on the 30-minute time frame. And now we're going to assume that this candle did not exist. So now when you're looking at this 30-minute, you see there's a clean buy as long as price respects this previous low. But looking at the 15-minute, we can see that the 15-minute candle has closed bearish, which means we're creating a minor rejection over here. So now the best thing to do at this time would be to either wait for another 15-minute candle to close bullish, and this will be your confirmation for the next one to continue up, and then you can say that, okay, the 30-minute can continue up, or you need to wait for this candle to break the highs right over here. Because most probably what can happen is that the next 15-minute candle can continue going bearish back in the range. And if you've taken a buy at this point, now you see that a 30-minute candle is moving bearish right over here. So a lot of people get stuck in this scenario here as well. Like people wondering if this is going to be saved or not. Don't worry, it's going to be saved for you guys. I'm going to leave it saved. Right? So these are certain things. I was looking back. Actually, I was looking back at the last 6 months where I performed, and this is what I saw. Most times, this is where I was making mistakes, right? So I've basically, seen these mistakes. I've seen them happen a lot of times. And now this is the point where I was trying to look to see, okay, well, maybe I have to wait to see for price to break the highs or the lows, like on surface, these concepts look pretty simple. But when you really start watching them, in a live market, then there's a big difference there, right? So, and I know like guys say, hey, we can learn from the webinars on YouTube and stuff like that. That's true. You can learn a lot from the webinars on YouTube. You can get a lot of knowledge there from YouTube as well, but you need someone with you who's going to give you some sort of experience, based on experience. So those things matter a lot. Let's try to answer some questions over here. This is, are you coming back for the live streams tomorrow? No, I'm taking a break. I'm not even looking at the charts for the rest of the year. I'm probably going to start looking at the charts from the 4th of January. Yeah, 4th of January is going to be a good time to start looking back at the charts again. Okay, what's this? This is how to know if a broker is trusted. See, that's a very difficult question. Right? And the reason why it's a difficult question now is because now there are a lot of regulations being placed on brokerages, like brokerages, especially which are regulated in major jurisdictions. like Australia, US, Canada, and the regulations are mostly to keep clients safe, because like most people, they don't know how to trade. Well, they do know how to trade, don't get me wrong, but they don't know how to manage risk, right? And the regulations, they come in the form of, okay, now the leverage is reduced. So when you have reduced leverage, that means now you can risk less. So when you can risk less, then you can lose less. So the solution is kind of like, now you have these crypto brokerages that's coming up, so providing, people an edge. So, I mean, when we talk about trust, like you can't even trust regulated brokerages. I remember I had money in Quadriga Exchange. It was regulated in Canada and they went bust, So after they went bust, I realized that no matter how regulated you are, I mean, things can still happen. So, what crypto for newbies? I don't think any cryptos are for newbies at all, because, crypto, that's a whole nother topic which may need to come back to later on. What's this question here? Are wick fills mostly relevant on the daily and the 4-hour time frame if you are a day trader and a swing trader? That's a really good question. And the way I'm going to answer that question is going to be through visuals, because I'm a visual learner. And I think most people are visual learners. And I think most people do well when they are taught visually. So let's come back to this paper right over here. So let's say that you have a candle. Then this is a 1-hour candle, right? And if this is on, let's say, GBP JPY, this is on GBP JPY, right? How many pips is this wick is going to be on the 1-hour time frame? Can someone guess? Can you guys guess? Can you guys get the numbers there? 10 pips? We're getting 15 pips. We're getting 20 pips. We're getting 50 pips. No, man, no 50 pips. Relax, right? So this would be around, I'd say, like 10 to 15 pips, right? This wick right over here. Let's say now if you have a 4-hour candle on GBP JPY, this wick is probably going to be around 25 to 30 pips on the 4-hour. So do you think aiming for a wick fill on the 4-hour would make sense, or aiming for the wick fill on the 1-hour would make sense? I think aiming for a wick fill on the 4-hour would make much more sense, because there's more range, you can get more out of it. Subsequently, if you're looking at the daily time frames, now daily you're talking about bigger wicks over here. On daily you have around like 40 to 45 pip ranges, so more opportunities to get you some sort of trades there. So I think it's better if you focus on the 4-hour or the daily rather than the 1-hour time frame. If you're focusing on 1-hour time frame wick fills, then you're also anticipating price to break above these highs and to continue moving bullish. I would love to hear more about your opinion about Bitcoin, because I see you and Ted talk a lot about it and you got a great vision. I'm off crypto. I don't have a great vision on crypto. I don't understand crypto. What I do think is happening is, I think people are the price is just I think it's artificially inflated, because people are home, we have lockdowns, and people have nothing to do. They're like, oh, let's do crypto. Like, I know a friend of mine, he bought Bitcoin only because he's like, I have nothing to do. Let's just buy Bitcoin and let's see what happens, So, do you smoke pot, Rajabanks? No, I don't do drugs. Let's take a look over here. Will you be using your own broker next year? It's not 100% my own. I partnered up with some professionals in the industry, and that's how, it's being launched. But the main purpose of this brokerage was so the first thing was, I looked at my statements from VantageFX. I paid almost $40,000 in commissions to VantageFX. And I started thinking that, okay, if I'm doing IB with a brokerage, that's probably going to give me some money, and that's probably going to get me some sort of cuts on commissions. But I paid $40,000 to VantageFX, and I have money laying around. So why not look into options of opening my own firm, where I can keep my own commissions, part of the commissions, because some of them go to liquidity providers. And if it starts off as a business, that's perfect. So I think that's a great stepping stone for myself. I think it's a new challenge too. But the other reason why we wanted to do this was because people can trade wherever they want to trade, right? It's just going to be like any other your crypto brokerage. But the main difference is going to be that when you trade and when you pay commissions to trade, you can use those commissions to buy the Market Fluidity database, or you can use those commissions to buy magic keys, or you can use those commissions to buy. We're actually in talks with certain educators in the Forex space to see if they'll be willing to put their database on Dominion markets as well, so that people who trade on Dominion markets, you can use their commissions to get those educational materials too. So in a way, we're incentivizing traders to actually learn, manage risk, so you can trade better. Because if you can trade better, you're gonna stay with us for longer, And when you stay with the brokerage for longer, the brokerage makes money off of commissions and spreads. So, it's gonna be a win-win for everybody. All right, so let's take a look at this next question here. This is, can we apply your tips and tricks regarding technical analysis to the stock market? You can, but there's a difference in volume. I think the currency market has way more volume than the stock market. So the way the candles form in currency market, they're way more bigger. I would say there's more juice in them. Stock market, I'm not sure about that. I'm not sure what moves it. I have no idea, so because I'm not going to sit here and try to explain the stock market when I literally don't have any idea about it. Can you repeat about the first half of the candles? You can probably watch the live later. It's going to be saved. Why don't you like to swing trade? That's a very good question. Why don't I like to swing trade? I tried swing trading earlier on in my trading career, and what would happen was I would want to get, because in the start it was very profitable getting 10 pips, 12 pips off of the 4-hour time frame, and then I would see people on Instagram. You know what? Social media, it devastated my trading performance in the beginning. It really devastated that. And the reason and the way how it devastated was because I would see people making 100 pips, 200 pips with no proof. Obviously with no proof, it's just on Instagram pictures. I was like, oh wow, man, you know what? I want to get those 100 pips. I want to get those 150 pips. Why can't I get them? So then I started learning Fibonacci. I started learning about trend lines and divergences, and I started applying those concepts on the higher time frames, and almost all the time I would go in drawdowns. Almost all the time. And as a new trader, if price would come to my stop loss, I would kind of move it based on the higher time frame, and then that would mean more drawdown, and more drawdown means more money on the line, right? So it didn't go too well. But what I did notice was that, and I'm sure we have around 750 people here, and I'm sure a lot of you people have been through the same thing, that whenever you go for a swing trade, almost all the time, your trade is going to go in profits for about 15 pips, 20 pips, and after it goes in profits for about 20, 15 pips, it almost all the time comes back in drawdown. You guys can agree with that, right? Say me. If you guys say me, oh yeah, there we go. There we go. Slowly now, when you start remembering, you're going to start noticing that almost all the time you go in profits, right? And that's what I started to notice. I was like, okay, if I'm going in profits almost all the time in the beginning, maybe I can just secure profits there. So I started securing profits at 10, 15 pips, and the rest I just put stops at break even. And when I put stops at break even, I noticed that 80% of the time my position was getting stopped out at break even, 80% of the time. And very less it would continue moving, so, and then I was like, okay, you know what? I'm just going to focus on 10, 15 pips and whatever the size of my account is, the process remains the same, right? The trading process, it almost always remains the same. Just like you have a sales process, when you prospect a client, you go to their home, you talk to them, you kind of you have your own sales process, right? Introduction to you start creating a problem, you offer them a solution. It's the same cycle, right? So trading, same thing. Your processes are going to remain the same. The only thing that's going to change over time is going to be your risk parameters. It's going to be your lot sizes. Your lot sizes are the only things that's going to increase. So that was a pretty lengthy explanation for why I don't swing trade. Do you plan to operate futures? Probably not. I don't understand futures as much. Oh, what's this over here? This is a good question. Do you agree on trading is not only setups, it's mostly discipline and risk management? Some people trade demo and think it's the same in real money. I think it most to do with now, I get this all the time that people, they start trading demo to get that technical knowledge in, right? To get that confidence in their technical abilities in. But the one thing that you don't get to experience is live money management, so because when you're trying to trade in a live market, even if it's $100, and when you take a loss, that hits you different than a loss that hits you when you take that on a demo account. So I tell guys, hey, like, you know what? It doesn't matter how much money you have. Start a live account with $100 or with $200 or $500. Something you can be like, okay, even if I lose it, that's totally fine. Because once you start with that small amount, you're going to start developing your emotions around money. Because whenever you're making a decision in trading on a live account, that's like an emotional decision, because that decision is being made on money, and we're here to make money. And when you're making a decision on a live account, that's different. So you got to train those emotional muscles surrounding money. On demo, technicals make sense. You can work through it, but live account, totally different. So it's a big difference there. Let me check the time over here. Oh, I still got some time. Okay, let's see here. Are you trading from the 4th or 11th? I'm going to be trading. I'm going to be trading on the 11th. I'm going to be trading on Dominion Markets. We're still waiting for some confirmations from Metacodes, and then once we get that, we're going to get it going. This is a very good question here. Did you thought you would come this far and have this influence when you started? I don't know. That was not my intent. I mean, I look at 100,000 followers. That was not my intent at all. And I was listening to this podcast by Jordan Peterson earlier, and they were basically talking about how us as humans, we need to continue growing. We need to continue doing different steps or different things that puts us in an uncomfortable position, because here's the thing, right? This is a very important thing about learning. Whenever you're learning because you're making mistakes in something you didn't know. Right? That's what you're learning. Whenever you learn something new, you're learning that new thing because you failed at a certain thing. And when you fail at a certain thing, now you're moving into a domain where you've never been before, right? You're basically moving into an unknown, which is where you're going to make a mistake. And when you're going to make a mistake, then you're going to learn something from it, and that learning process is going to make you better in the processes you already know. So I was actually talking to somebody about this earlier on too. Like I started being a trader. I was a trader, and then my whole motive was to post things on Instagram or to post processes. So I started posting about my process, what I trade, how I trade. We posted a lot of webinars on YouTube too of like, how we do things. And I saw that as something really simple. If I can post a webinar on YouTube and someone can watch it and someone can learn from it, I think that's going to benefit them more. Now that's free knowledge, but then there were people who appreciated what we did and who wanted to get close to us. Then they started contacting me and saying, hey man, like, do you have a group and this and like that? We're like, no, we don't. And then we started off a online trading academy. I had to incorporate it. I had to make papers for it. So we started the online trading academy, which now has become Market Fluidity, a global brand. And that started because people wanted to get close to us and to learn like more on like a personal level, so that started from there. It grew. We hired an administration team overseas. We have that now. And then we moved into Magic Keys, and now we're slowly moving into starting a brokerage, right? So that's a part of growth. So no matter what industry you're in, you're always told about growth. You have to grow, keep growing, but don't get me wrong. Like when you reach to a level where people start looking up to you, I mean, that was never the goal. It's basically like you need to, I don't know, man, that's a very powerful situation to be in. And I try not to think about that a lot. I try not to think about that all the time. But now what I'm really cautious about is to know or to be aware of what I say and what I post. Because there are a lot of people who follow us, they look up to us, they try to duplicate the things we do. So it's really important. Okay, so let's go to the next question here. I'm from UK. I'm traveling, working between 6:30 and 7:30 GMT. Can I still fit trading around that time? That's going to be tough because when you're talking about 7 p.m. GMT, that's almost afternoon time when the volume is dying a little bit, So what you can do is you can basically focus on the 4-hour time frames, because here's the thing. When you have time to trade, now, a lot of my followers are in the same position where the only time you have to trade is when there's no volume in the market. So whenever there's no volume in the market, you have to look at the 4-hour time frames, right? Because we need to understand that candles, when they move in a certain way on a 30-minute time frame, the same candle formations you're going to see on the 4-hour time frame, on the daily time frame, and on the weekly time frame. You can take a look at the charts right now while on holidays, right? And the only difference there's going to be in the amount of time you'll have to wait. Because if you're looking at the 4-hour candle formations, then you have to wait maybe 2 hours or 3 hours. Or if you're looking at the daily candle formations, you have to wait for about maybe like 6 hours, 7 hours. But if you're looking at, let's say, the 1 hour or the 30-minute candle formations, maybe you don't have to wait as much. Maybe you have to wait maybe 30 minutes or an hour, So start looking at the 4-hour candle formations. Start to look at that for about 2 weeks, 3 weeks, and see if they do play out. Because once they start playing out, you'll start to visualize the 4-hour candles. Now, another thing that's going to change is obviously your stop loss is going to be bigger on the 4-hour time frames. Your take profit targets are also going to be bigger. They're going to be different. So there's going to be a little bit of a change in that. So, I think looking at the higher time frames, you're also going to have to be more patient too, because they take a little bit of longer to operate. What's this? What is one pivotal change in the current lifestyle as compared to before you were profitable? I think the number one change that has happened in my lifestyle is that I've become more frugal, and frugal in a sense that I've become more aware of where my money is coming in from and where is it going, what my expenses look like, where am I investing my time and money in at the same time. So that's something I have to be very careful about because I now understand that the more I can save, the more I can put up to different projects later on. Because here's the thing. When you have someone who's making, let's say, 6,000 a month, 6,000 a month, 7,000 a month, you're saving about 2,000, 3,000 a month. So when you're saving 2,000, 2,500 a month, and when an opportunity comes your way, you're going to be open to investing in that opportunity. But if you're making 6,000 a month and now you're upgrading your car, you're upgrading your, let's say, TV, you're upgrading your laptop, you're getting more subscription services. Now, if you're not saving money at the end of the month, and if an opportunity comes, now you're going to say, man, if I had saved a little bit of money, I would have been in that opportunity. So that's where people go wrong. When your pay increases, your lifestyle does not have to increase with the pay. Your lifestyle remains the same. The only thing that's going to change is that now you can afford to invest in different opportunities. So that's what I've learned so far by making money in trading, obviously education, magic keys. We're moving into a brokerage business. So the only thing I've learned is to just save. If I hadn't have saved money, I wouldn't be able to open a brokerage. Let's put it that way, because you need to have money to start something new, so that's something I learned. This was actually an idea in my head for the last 2 years, but paying Vantage FX 40,000 in commissions, that basically sealed the deal for me. How do you know when you're taking profits too early? See, for you to ask that means you're taking profits too early. I think a lot of people have that issue, where you take profits too early. And the best thing to do at that time is whenever you feel like you're taking profits too early, close majority of your position and let a portion of that position run. So what I want to say is that let's take a look at this example right here. Actually, we're going to take a look at the time. I'm expecting somebody. So we still got a little bit of time over here. Let's say that candle is moving bullish, right? Candle is moving bullish. You're executing a buy at this point, and now you're anticipating the next candle to move bullish. Next candle moves bullish, right? Your buy position is right over here, and candle moves up to a point where you see some sort of a rejection to the left-hand side, right? And now you're like, okay, you know what? The price is not at the amount of pips I want it to be, so maybe I want to exit early, because I'm afraid. So whenever you're getting afraid, close 80% of your position. So once you close 80% of your position, bring your stop loss up to your entry point and let the position run. Because if this rest of your 10%, if it continues running, you're still going to be in this trade and your confidence is going to go up. So the more times, so let's say you do this 10 times, and out of 10 times, 6 times your position continues running towards your take profit. So now the 11th time when this happens again, right, you're going to be more confident to let your entire position run, or you're going to be more confident to even let maybe 60% run. So now slowly you're going to get more confident in letting your positions run because you've seen the statistic that majority of your positions go to take profit, and you're going to say, okay, you know what? Logically, it makes sense to let the position run because there's a higher probability it's going to continue moving to your take profit. Hope that answers that question there. Let's... Will this new broker have better spread than Vantage or IC Markets? No, because IC Markets is a huge brokerage, right? They have a lot of money, and I think IC Markets have one of the best spreads in the industry, IC Markets. But due to regulations, the leverage has been cut down, so sooner or later, everyone's going to be moving to offshore brokerages. Okay, how do you trade the same way on the 4-hour and daily? Excuse me, had a lot of food earlier. How do you trade the same way on the 4-hour and daily? It's basically the same way you do on the 30-minute and the 1 hour. All right, let's see this here. Not a question, but congrats for the 100K. Thank you. Would you please tell us about your risk management setup? Would you please tell us about your risk management setup? I think to answer that question, you need to watch the virtual class we did. It's on YouTube, so you need to go watch that. We're probably going to have a really big webinar on risk management somewhere in February or March, so keep an eye on that. Let's say here, what's a realistic monthly percentage? A realistic monthly percentage, I think it's going to be about 10%, 15%. If you can do 10 to 15%, I think that's pretty good. Because let's say if you have a $10,000 account and you're doing 10%, you're making $1,000 a month over there, and that's safe. That's based on proper risk as well, and as you get better, then you start increasing your risk, so I think doing like 15% is still pretty good. 15, 20%, 10% starters, still pretty good. Are you taking the COVID vaccine? Oh, everyone's taking that vaccine. Don't worry about it. Everyone's going to take it. How did you find out about 10 pips? We already talked about that. What steps are you taking to make sure you can prioritize trading next year, even with many other distracting your mind outside of trading? The number one thing I can make sure that I'm going to be sharp on trading is going to be knowing my time to trade, right? Anything that happens outside of trading, that happens outside of my trading time. You guys need to understand this part. It's really important. Everyone who knows me, they know my trading time is from 6 a.m. all the way to, I would say, 9 a.m. And then it kind of like dribbles by 10 a.m. So from 6 a.m. to 9 a.m. Eastern, I'm trading at this time. Whatever happens during this time, it doesn't matter unless it's an emergency. But outside of this time, everything else can happen. So that's how I know I can prioritize trading, because I have a set time. So all the distractions, those distractions can happen outside of that time, not within that time. Within that time, that's my work time. So distractions, they happen after that time. So you need to prioritize this, because trading, you can make a lot of money in trading, but you need to prioritize a set time. A lot of time, when I would do is now we have a lot of people who are intelligent. Okay, there's one term I'm going to use, and don't take this term personally. Take this as a sarcasm term. And that sarcasm term is intellectual dumbass. When I first started trading, I was intelligent dumbass. I was an intelligent dumbass when I started trading. And the reason why I say I was an intelligent dumbass was because I thought I knew everything. And since I thought I knew everything, I was focusing on everything. I was focusing on all the time to trade. I was focusing on New York session, London session, Asian session. I was focusing on 6 pairs, 7 pairs, because I'm like, hey, you know what? I'm intelligent. But in reality, I was an intelligent dumbass, because I knew what to do. I could read price action, but I was a dumbass at maybe executing or maybe understanding what basically trading is. So I had to keep the intelligent part with me, and I needed to remove the dumbass part. And once I removed the dumbass part, everything started to align perfectly. Because all I needed, okay, here's the thing. I was watching a video yesterday, right? I was watching a video yesterday about Amazon FBAs, people who sell stuff on Amazon. And this guy is wildly successful guy, older guy. He's in his 40s, wildly successful. Don't ask me. Okay, I'm going to tell you the name. His YouTube name is Extreme Commerce, something like that. The wildly successful guy. And he was talking about that if you want to succeed in the Amazon FBA business, you need to have one store and you need to have one product. And you need to just focus on one store and one product, and that's going to make you $1 million. That's what he said. And when he said that, I was like, man, this is true. Because in trading, we do the same thing. In trading, you have one pair and you have one time, and that's it. For me, 6 to 9 a.m., pound yen, and that's all what I focus on. So, and once I started focusing on that, I removed the dumbass part, but I kept the intelligent part, because now I got intelligent during that time. I got intelligent on that one pair. But before that, I was intelligent. I was trying to get intelligent on everything, but in reality, I was an intelligent dumbass. So we got a lot of intelligent dumbasses here, and walking in 2021, we have to remove that dumbass part and start focusing on the intelligence part. Really important for everybody. How do I stop my account from bleeding? Maybe focus on your risk management. Maybe stop removing your stop losses. Maybe stop taking trades in drawdown. Maybe stop being an intelligent dumbass, Because, okay, here's another characteristic of an intelligent dumbass. I was in one too. And the one major characteristic of an intelligent dumbass is that when our trades are going against us and it's approaching a stop loss, guess what we're going to do? We're going to remove the stop loss, or we're going to increase the stop loss a little bit, tiny little bit. And the moment we do that, guess what we are? We're intelligent dumbasses. Because one, we're intelligent because we have a stop loss. Number two, we're removing it, so we're a dumbass now, right? So we have to remove those things walking in 2021. It's going to change your whole career in trading. So I'm going to answer this one last question here because I'm running out of time. Yeah, I'm actually ran out of time right now. So we're going to choose a really, really good question over here. How did you struggle with learning? How did you spend your early 20s? Is that a good question? What type of partnership? Can you save this live? Okay, I'm going to save this live. Okay, let's answer this question right over here. It's a very generic question here. I think it's going to help a lot of young guys too, because I know a lot of young people follow me. What do you think about Inner Circle Trader? Nothing. Okay. Did you ever struggle with learning? How did you spend your early 20s? I think, see, the way our education system was set up, right? The way our education system was set up, it was more set up on like memorizing and then regurgitating that on exams. That's the way our education system was set up. And I wasn't good at memorizing stuff. And later on also in my high school and stuff, I was slower to understand concepts. So basically if I had a concept, and my friends know this too, so whenever they tell me a new concept, it takes me a little bit of time to really understand that. So same thing happened to me in school. In school, I would need to go over the concept 6-7 times to completely understand what this concept was. And when I moved into my 20s, I think the biggest challenge I faced was when I started going into my workforce. The biggest problem was that with money, because starting off, when we're young, we're more prone to looking at materialistic things and stuff like that. So I think it's really important to understand where our money is going to go as a young adult, because the more we can focus on saving, I'm going to say this over and over again, that you need to start saving money as a young adult. Because think what happens, right? When we're young, we have a lot of friends, we have an entourage, we have like a group, we have like this big, like, circle of friends we have from high school or university. But the moment your university stops, the moment your university stops, I know a lot of people in their 30s right now, you're watching this too, and you can agree to this. The moment our university stops, the people we knew in university, slowly they start to kind of like fade away a little bit. And as you move into your 30s, your late 20s, early 30s, you start to settle down, all those friends, they kind of like move away, and then you start making new friends. You start making friends with families, you start making friends with kids. Like once you have kids, you start looking for people who have kids, because now you want your kids to engage properly, and then you start remembering all the things you did in your 20s. And for me, the main thing I didn't focus on in my 20s were my finances. Because I spent a lot of money in my 20s. Like we'd go to bars, we'd spend like $300 a night, $200 a night as a 25-year-old, 24-year-old. I mean, it was just madness, crazy. And when I think about that, I'm like, oh, thank God that in my late 20s, I figured out how life works, how money works, how finances work, how business works. I figured that out. I had to figure that out after losing. So I think the biggest tip I can give to young adults right now is to save money right now. Because the more you can save at this point, when you move into your 30s, you're going to thank yourself in your 20s. You're going to thank your younger self that, man, thank God that you saved money, because now when you're in your 30s, you have mortgage payments, you have kids, you have fees to pay, your bills go up, your grocery bills go up. So it takes a lot of toll, man. Like my electricity plus water bill the other day was like $320. And I'm like, oh shit, $320, man. It's a lot of money. So, all right, let's just answer this one last thing over here. Yeah, I guess that's about it. Probably gonna come back tomorrow. We're trying to do another live over here, and yeah, awesome guys. So I think if you haven't watched the virtual class we had, I think 2 weeks ago, go to YouTube and, okay, what's this? Please answer my question. Please answer my question. Please answer my question. This one dude, he said, please answer my question like 7 times and didn't even write his question. See, maybe next time. All right, everyone, take care. Have a good weekend, and have a good New Year's. So now you just got to figure out how to, okay, there we go. We can close it right here. All right, take care, everybody. Have fun. How do you end this? Oh, right here.